Welcome back. You're still watching Street Science. It's been a difficult start to the year, spilling into February, but now all eyes are on the multiple cues, including global events, the vote on account, and of course elections. Udin, just a word on the fabric of the market as well. I noticed over the last month and a half, leadership is slowly waning. I mean, even amongst those safe sectors that Nirmal was talking about, FMCG actually isn't counted anymore. It's become a flat performer. Oil and gas is deeply negative. The market is also beginning to face a crisis of leadership, is it not?
To an extent, and I think that I won't say it's a crisis, but a bit of struggle on the leadership front is also coming through from the banking space. Results have been patchy. The Bank Nifty was down 11% in the January series, and I think that's probably leading to a bit of a struggle. Post-Reliance, all the news on the oil and gas or the gas price front, it was expected that Reliance might actually lead the market a bit more. That's not happened. And IT also is going through a bit of a bumpy phase. It's not an underperformer, but you have seen some corrective phases kicking in. Metals have also not been very strong. So you do not have a situation with the Nifty going through a consolidation stroke correction phase where a particular group of names is ready to lead the Nifty beyond 6,400. But I think what's interesting also over the last 5 or 6 weeks is that while the large caps have sort of stalled, you have seen the market spread out at the bottom. I think a lot of mid-cap stocks, non-index large-cap names have done quite well. Not to suggest that it is reflected in the mid-cap index per se, or as a class, mid-caps have outperformed hugely. But given that the Nifty has come off 400 points, the fact that a lot of mid-caps have actually done well over the last 5 or 6 weeks, at least for the moment, seems to me a bit of an encouraging sign.
Yeah, absolutely. Aban, Voltas, they've had some very smart rallies through the month of Jan and Feb. But let's post all those questions to Dheeraj Agarwal, who joins in as well. Dheeraj, hi. Big global whirlwind that emerging markets have been hit by. How do you feel India is placed right now, and where do you think we are in this corrective phase? Almost done, or do you foresee more pain in February?
I think there could be a little bit more downside. I mean, this whole whether you call it turmoil or a little bit of a volatility in the emerging world that we have seen, I don't think will subside so easily, because appears to us that US has started the process of slowly unwinding the bond purchase program. It's only the pace which can be debated or can be varied going forward, little less or little more. But the process has started, and this will bring in some level of adjustment in the liquidity and funds flow. And 4 or 5 weeks is just too short a time period for the adjustment process to be over.
Hi Dheeraj, so you've got used to this $20 billion kind of an annual inflow from FIIs. I mean, good GDP or good earnings or not. Do you think 2014 in a sense could be different?
That's my fear. I mean, it's sentiment around flows is extremely difficult to predict, because it changes very quickly. It can change in a fortnight, it can change in a month. But the fear that I have is exactly what you said. $20 billion per year inflow we have started taking for granted, number one. Number two, in the last, ever since 93, 94 when the markets opened up, we have seen only 2 years of outflows. And 98 was small. So actually only 1 year of outflow, which is 2008, which was meaningful. No other emerging market has that kind of a track record. Every emerging market goes in through phases of outflows based upon a variety of reasons, either domestic economy or global liquidity. We haven't seen a significant outflow year yet, and that actually is a risk rather than a safety cushion.
So how much more downside, Dheeraj? Do you think the fact that flows might not be very supportive could actually limit upside for the market, or do you think it might actually drive serious declines?
The index from many points of view has become sort of a misleading indicator because of the composition of Indian markets, where a number of sectors, various sectors can move in opposite directions at the same time, and they are quite large. I mean, for example, IT has been doing very well because of US doing well, nothing to do with Indian economy, Indian politics or emerging market dynamics, which is what has resulted in narrower range for index movement as compared to the broad market. So at the index level, I reckon the downside risk could be 8-10%. Doesn't seem or sound very large. but for one section of the market, it could be meaningful.
While the vote on account may be a non-event for the market, Dheeraj, there is a huge fiscal deficit target that the finance minister has to meet, and within that, of course, his divestment target. There's a lot that's probably going to hit the market. It has to happen before the 3rd of March. Do you sense the market has the ability or the appetite to absorb it, particularly given the point you were making about liquidity easing off?
It will be tough. Going for a large paper supply in an environment where global liquidity and funds flow is looking a little bit tight is going to be tough. It won't be easy, as we saw in the recent case of SBI QIB as well.
So how do you do this tactically between sectors, Dheeraj? Because anecdotally, it seems investors who have been holding defensives are getting a little more, uneasy. They're looking to book profits. We were just talking about how mid-caps are beginning to perform. Tactically, how do you position yourself, going forward?
So my approach for the last few years has been extremely bottom-up rather than top-down. And I think this will continue to work at least for a while more. Making a call on the full year could be a little bit challenging because of a significant event that India faces middle of this year. One can break it into two halves at least. So I would continue to say just continue to look bottom-up. And at this point of time, from an earnings stroke valuation profile, pharmaceuticals and IT continue to look extremely good. FMCG is struggling a little bit, primarily because of the slowdown in top line that almost across the board that we have seen. So it's nothing to do with tactical defensive versus aggressive positioning. It's purely bottom up at this point. So it's possible to deploy money even in the banking sector. There are a few names which are doing well despite whatever headwinds which is there. And even industrial. So it's all. I would build a bottom-up portfolio at this point of time rather than a top-down tactical portfolio.
What's the best way to keep an eye on politics now, Dheeraj? Because we will see a lot of news flow between now and May, and the market will probably be volatile in response to some of that news flow. What's the best way to track what's going to happen between now and the election verdict?
That's one thing I have to confess I'm extremely clueless, completely clueless about. And for that I go back and look back in the history that every single forecast made by either opinion polls or stockbrokers or market strategists, ever since I've come to the markets, which was 1992, every single election forecast has gone wrong. So nobody predicted a third front in 96, nobody predicted BJP government in 98 or 99 whenever they came to power. Nobody predicted Congress coming to power in 2004. Nobody predicted UPA coming back with such a solid majority in 2009. So 100 out of 100, all four forecasts have gone wrong. So I just don't want to go down that path.
Maybe it's a good thing that this time no one has a clue either, Dheeraj, between the third front or the BJP or the dark horse, the Communists. But thank you very much for joining in and for your time. That's the time we've got on the show. It promises to be an interesting next couple of weeks. Of course, there's a vote no count, but watch the global space. From Udi and myself and the entire team, goodbye.